Now we're going to talk about the terminology that we're going to use in managerial accounting. In financial accounting, we refer to things as expenses. Everything was an expense. Rent expense, salaries expense, so on, so on, so on. An expense was defined as being consumed in order to earn revenue. Well, in managerial accounting, the terminology changes. Instead of calling them expenses, we call them costs. And we have about 8 different definitions of costs. And this is what we're going to talk about today. What do we mean by certain terms that we use related to costs? So to begin with, the first thing is cost object. That is anything. It could be the number of rooms in a hotel. It could be a kilometer of paved highway. Anything for which we want a separate measurement of costs. So we're going to look at costs related to that cost object. And we're going to accumulate that cost. That is, bring it all together and then assign it to the cost object. So there are 2 stages here when we talk about accounting. First, accumulate all the costs related to the cost object and determine then and assign those various costs to the cost object. And in that way, we provide information for managers in making their decision or any other purposes. Now, to begin with, when we look and analyze a cost in relation to a cost object, we ask ourselves, is it a direct cost or an indirect cost? It could be one or two. And that means a direct cost is a cost that can be traced directly to the cost object and has been consumed. We can measure it. So first of all, a direct cost is a cost that I can trace and measure as being consumed by that cost object. An indirect cost, in contrast, is a cost that I cannot trace and therefore I cannot measure as being consumed by the cost object. Therefore I have to allocate. If I'm manufacturing a desk and I look at the cost of wood in the manufacture of that desk, I say, okay, is that cost direct? And the cost object is the manufacture of one desk. If I can trace the amount of wood and measure how much was consumed, yes, that's a direct cost. So wood would be a direct cost. Now, there's the electricity that is used to cut that wood. Now, that cost is also consumed by the cost object, which is the manufacture of one desk, but I don't know how much of the electricity was consumed by that specific desk. So therefore, electricity costs would be considered to be indirect costs to the cost object, which is the manufacture of one desk. Now, cost behavior patterns. We now look at how cost changes or doesn't change. How does it behave when there are changes in the cost object? That is, I produce more desks. Well, we look and we say, okay, is the cost variable? That is, does it change in total in direct proportion to changes in the cost driver? Well, the cost driver is the cost object. So if my cost object is the manufacture of one desk and the amount is $50 that goes of wood that goes into one desk, well, if I produce 2 desks, what would be the total cost of wood? Well, you would say 100. Therefore, wood would be a variable cost because, you see, it doubled when production doubled. So it changed in total, it went from 50 to 100, in direct proportion to changes in the cost object. The cost object was driving the cost. If I did 10 desks, then the total cost for wood would be 10 times 50. Now, there are other costs in manufacturing that desk. I manufacture it in a plant, a factory, and I pay rent. Well, I pay rent if I do 1 desk, and I pay rent if I manufacture 10 desks. You see, rent will not change in total and direct proportion to the number of desks I produce. So I would say rent is a fixed cost. So we looked at a cost. Is this cost direct or indirect? Is it fixed or is it variable? Now we make some assumptions here. Costs are defined as fixed and variable with respect to the cost object, of course. Now, we're talking that costs are linear. When we talk about fixed costs, we also must bring in this idea of relevant range. If I was to produce 50,000 desks, of course my fixed costs would change. My factory is too small to produce. So fixed costs remain fixed within a certain level of activity. Now, be careful. When we talk about costs, we just talked about costs in total. But you see, quite often we need unit costs to produce a desk. A unit cost is the cost computed by dividing the total cost by the number of units. It's also called the average cost. But you must be careful here. It's not a problem when we're talking about variable costs, because you see, the unit cost of producing a desk is $50 for wood. But if I produce 10 desks and my fixed cost for factory was $1,000, well, if I unitize that, I would say that the fixed cost per desk is 100. That is 1,000 divided by 10. That's how I get the average cost. But that assumes that if I make more desks, my fixed costs will go up, but they won't. They actually go down per desk. So be very careful with unit costs. Deal most often with full costs. Now, there's two other classifications that's so important for manufacturing cost. A manufacturer must keep track of all costs that have gone into the product, into the production of the product. You see, all those costs are actually not consumed as expenses. They're part of the cost of inventory. When I produce my 10 desks, I incurred a lot of costs, labor and material and overhead costs. But those costs are costs to produce my inventory, and inventory is an asset on the balance sheet. It only becomes an expense when I sell the items, and it comes out as the cost of goods sold. So you see, we have to distinguish very carefully in a manufacturing environment what costs are fixed, or what costs are inventoriable, or what are called product cost, and what costs are called period costs. That is the cost of the operating period. Period costs are generally selling and administration costs. So that is another classification you must be careful of. Now, when we talk about manufacturing costs, the total manufacturing costs are into three categories. Material costs, that is direct material that I can trace and measure directly to the product I'm producing. The direct manufacturing cost, the labor cost, that is the labor that I can measure and trace directly to the production of my desk. And then all other manufacturing costs are referred to as indirect manufacturing costs, or overhead, or burden costs, or manufacturing overhead. So these three categories you must become very familiar with and be able to distinguish between them. Now, there are prime costs. Prime costs of the three, you have direct material, direct labor, and overhead were the three costs. Well, these two, direct material, are called prime. They're the main ones, direct material and direct labor. Now, direct labor and overhead are referred to as conversion, because I take the material, I apply labor and overhead costs to convert that material to a finished good, and therefore complete the product, and it's ready for sale. And that concludes our cost items.